That's a topic for Peter Jedinák, counsel in Allen & Overy, who specializes in capital markets, derivative and banking and financial regulations. So, Cryptobonds.
Thank you very much for coming. Good afternoon. Thank you for being so patient and staying with us until this relatively late hour. I hope this topic will be interesting. It's definitely interesting for me because obviously I am a lawyer by training, which means technology and crypto stuff and artificial intelligence and these things are a bit alien to me. On the other hand, I am quite skilled in capital markets, and this is the area where this technology and law kind of bounce together in a very interesting way. First, a small disclosure, I'm not the one who actually invented or implemented any of these new instruments. So this is something which is coming from our London headquarters. And also this know-how and technology is being developed there. We hope, however, that as a global firm that we will see more of these deals and instruments and technology, also legal technology, deployed in other markets, including in the Central Europe and possibly in Slovakia quite soon. This is just a quick overview. We will start with a really simple thing. I mean, the implication of use of blockchain in legal sphere is pretty much the same as it is in any other sphere. And basically the key benefit is that it offers simplicity and reliability. Yeah? So instead of having individual ledgers kept at the level of the market participant and then some kind of central ledger at the level of the custodian or payment system, by using blockchain you can basically integrate these ledgers, creating simplicity, reliability, which is also good for lawyers. Yeah, that may be a surprise, but we actually prize simplicity and reliability of the records also very much. Now moving into more complicated sphere. So this is how currently a standard Eurobond structure looks like. So any issuer basically who wants to raise money in debt capital markets in Eurozone basically has to integrate or implement a scheme like this, which obviously is very much complex. It involves a number of parties. It has legal implications and complexities. So you have physical certificates which to be kept somewhere. You have digital records in the custody, in the clearing system. Now, what we are trying to do by deploying blockchain technology in this field, well, it's not something which is done by the law firm, obviously. So the technology is actually provided by a specialized company, actually one of the startups being part of Allen & Overy Fuse program, but it will be discussed later. But however, we can really simplify that original structure by replacing some of the elements of the traditional infrastructure by new blockchain technology. Now, you will see that I mean, this is the first type of crypto bond which we can call, let's say, or blockchain bond, and we can call it a hybrid bond in a sense that it is still issued and in real currency, let's say euro or sterling or whatever, and it is still backed by real money. And the denomination of the bond is actually still the traditional currency which is kept in the client money account. However, the blockchain or within the blockchain, you can these money is tokenized, and actually what the investors get are tokens representing their investments, and also the payments can be automated by way of smart contracts and you will see that the structure is just more simple than the original one. You can simplify the structure even further when you do a real crypto bond issue, fully denominated in a digital currency. In this case, it was based on public Ethereum blockchain, and the currency was Ether. But you can probably use also other technologies. And again, you see that actually in this case, the original structure is greatly simplified. And basically the only third party, except for the public blockchain, is somebody who is guarding the keys, the private keys, and somehow ensuring the safe custody of these digital assets representing the crypto bonds. Speaking of simplification, basically this shows the previous point from some other perspective, and that is bypassing the clearing system. By clearing system, I mean Euroclear, Clearstream, or Slovak Central Depository. So these institutions which basically record your rights to the securities, and you will see again that in the typical Eurobond structure, this clearing system and depository structure is quite complicated. So you have some top level depository, then you have Clearstream as the main, let's say, trading depository, and then you have chain of custodies down to the ultimate investors. So and everybody, fees are attached on every level of this chain. It's complicated, it's costly, and so on. When you do it in a blockchain way, you can actually bypass all the intermediaries. So what you have is actually more or less direct relationship between the issuer of the crypto bond and the ultimate investors. So this is just to summarize the benefits and of the structure, which were discussed pretty much. Basically, all the benefits goes down to simplification and reduction of the cost and increasing the reliability of the network and making it, let's say, more accessible and more affordable to a wider group of people. Now, I wouldn't be a lawyer if I wouldn't mention some kind of issues with this, and obviously we have issues in terms of regulation. We have issues that existing securities law, they do not necessarily fully recognize what we call crypto bonds or crypto assets. We have technical issues with capacity of the network, electricity consumption, and so on. Here, probably my main point would be something else, that in countries such as Slovakia, we should really, or possibly every country which want to make use of this new technology, should really make sure that its legislation will comply with three, let's say, key prerequisites, and that is, first, these crypto assets, these crypto bonds, you have to realize that they are not actually the bonds which are regulated as financial instruments in the present law. Yeah, they are basically legal constructs. They are contracts, and they are, let's call them, digital assets. So what the law should definitely do is to recognize this type of assets and really make sure that when we call something a digital asset or blockchain bond, we actually know what it is in legal sense, that it can be owned, it can be transferred, and so on, such as any other thing which is a subject matter of legal relationship. Then we should make sure that these new parties and these new service providers in these networks, they are somehow, I don't want to say regulated, but let's say recognized again by the regulation and by the law, so that they can actually serve as reliable service providers. Because today it's it's unregulated actually business in many sense, and and on the other hand, the traditional banks may not necessarily be able to do that. So we should really, I think, recognize the function of the new custodians and new platform operators, make them subject to some kind of controls in order to enhance the public trust in the system. And finally, the third point, which is probably important as well, is in order to create the market for this new type of product and really attract investors, broader investor base, we should think about some kind of transparency and investor protection in this regard. So I'm not advocating that we should make the blockchain bonds and new digital assets subject to the whole body of the financial regulation which currently exists, but there should be some level of transparency and some lighter or appropriate, let's call it this way, regulatory regime for these assets. Again, just to support the integrity of the system, to avoid scams, to avoid fraud, and so on. Already discussed this point but maybe one of these is really that in this area we are seeing increased activities. So these first two pilot transactions, which I described on the previous slides, like the true crypto bond and let's say tokenized fiat bond, they were issued only in 2017, and they were really the first transactions of this type in the world. Now we are seeing that more and more players are actually interested in this kind of raising money. And we think we will definitely see more of these things to come. Just as examples, so the examples or the case studies we discussed was these issuance supported by Nivera and Allen Overy London office, and it was a real issuer, yeah. So it was a furniture store, luxury furniture store retailer, but they actually raised money through these transactions. We saw in the region Erste Bank doing some crypto Schuldscheine issuance last year, and just this year, really also big names such as Societe Generale, Santander, they launched their pilot crypto bonds issuances, and we think just more of these will come. That's all.
Difficult topic for the time we are just in. But thank you anyway. Thank to Petr Jedinák. I think, oh, we have a question. So, could you denominate in a central bank issued currency? So crypto, high currency risk, typical not very liquid market.
Sorry. So in this first type we discussed, so it was actually, central bank currency denominated bond, backed by real money, in the sense that the legal obligation under the bond, investors paid real money. They were deposited on the custody account, on this client money account. Maybe I will. So there actually is a way, and we actually feel that this is the most viable way for the time being, because, too many slides, sorry. So in this structure, so we actually have, so the investors, they paid real money for the bonds. Also the obligation under the bonds for the issuer was to repay at some point real currency, so the denomination was real fiat currency. It is just that the transaction was recorded on blockchain, and the money were held or dematerialized on the client money account, and the bonds themselves had the form of digital assets, tokens. So yes, you can do that.
Thank you. I thank to Petr Jedinák, counsel in Allen & Overy.